It's another week in the markets, and we are back to cover everything that is impacting TradFi and crypto. We're going to hit what's ahead this week, economic reports, earnings calls, what's going on in the land of crypto, anything interesting, all of that and more today on Money Never Sleeps. Welcome back, everybody. As we get going today, do us a favor, hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice, so please do your own research for making any buys or sells. Kev, big week ahead. Yes. FOMC on Wednesday. We have some earnings from Apple, AMD. We're going to get some new jobs data, all sorts of fun stuff. Kind of a slow start to the week. Nothing too interesting today on the economic front. We get earnings from McDonald's, so we'll see how the McRib is impacting the bottom line there. But as we begin this week, the last couple of days of October, heading into the final 2 months of 2023, what has your attention right now?
Yeah, man, it's got to be TradFi, right? I think TradFi is arguably the most interesting thing in terms of how much price actually we've seen move recently. And I'm just going to pull up my screen right now so we can take a look at some of the major indices. But I think what a lot of people aren't realizing is we're currently in a corrective phase right now for TradFi. We're at 10% down for a lot of these major indices. But the question is it more than something that's just a correction, right? I honestly am of the belief that we are in a bit of a silent crash. It's something that we haven't necessarily seen too many people talk about. We're just seeing, the price go down. People are like, oh no, it's just it's just a corrective phase.
Kevin, we're up 573 points on the Dow today. How is it a crash?
Oh, it's easy, man.
That voice, by the way, that's just, I don't know where that voice came from.
It's a beautiful voice. I need you to record a what do you call it? An answering machine for me with that voice. Be like, watch Money Never Sleeps. Oh yeah, by the way, guys.
Kevin's phone. He's busy trading crypto.
Kevin got out of his Binance position. It's Halloween tomorrow and the monthly close because he's afraid of.
We are losing our fucking minds. How ridiculous this market is with what just happened over the last minute. I love it,
guys. I'm not even gonna say it. You know what that is? That's for the Dow Jones. 554 points, my ass. This is what you need to know. Just in time for spooky season, right? So yeah, I mean, we put in a death cross on the daily, and what I see right now going on in TradFi is a 550 point pump from, I don't know, freaking, what is this, middle of October, the 17th. We've put in roughly, let's see, from the top to the bottom, get out of the way, 1,800 points or so that we've dropped since the top here. And we're rallying 500 points. Yeah, a correction is due at some point, right? But the question is, are we just rallying because it's a death cross today? We got some important data later this week. We got, FOMC. We kind of know what the trajectory of whatever those rates are going to be. They're probably not going to raise rates this week. We got some earnings, but there's a lot of things that are just really weird right now. We're down roughly 10% across all the major indices, right? I honestly think that we are in a bit of a crash, and I think the beginning is starting. It's starting, like the beginning of this entire big come down that we've been talking about for a long time. The question is, we haven't got the news event just yet, right? We haven't got something that spooked the markets considerably to the point where we've seen the mass sell off. I think that's when people are going to recognize that we're in a bit of a crash. But right now, I mean, 10% is nothing to be, to be just kind of not acknowledging. If I look at this compared to where we were, I mean, this is July of this year. And currently it's going to be November, but that's a pretty good move within those, 4 months or so. I mean, guys, this is pretty scary. And again, if we look back at 2008, because 2008 obviously is our best frame of reference for when the markets do crash. I mean, here we are. They move fast. And this is on the daily, right? This thing could absolutely just be, let's say this is 10% down right here okay, we could have another push, maybe a little bit of a rally, and then we can still continue coming down at this point. There's no rules to say that that can't happen once again. And I think that's because we haven't had our Lehman Brothers moment. I haven't seen a Lehman Brothers moment so far in this market. It doesn't have to be in the banking sector. It doesn't have to be a company filing for bankruptcy or anything. It could just be some news event that absolutely spooks the markets. Look at COVID-19 back in 2020, right? That's something that just absolutely spooked the markets to a massive sell-off. But we do know that even prior to the actual collapse, we know that it was going down a little bit too, right? Let's see, maybe not in the Dow Jones, but there's other stocks where we can see like American Airlines and other stocks like that where they're bleeding into the drop there. So I necessarily am in the belief that we are in a bit of a silent crash. We haven't acknowledged it. I mean, the Dow bouncing today is pretty significant compared to where we are for the S&P. S&P is still roughly 80 points below where we said it needed to hold support at. It's below that. Death cross is coming for that one fairly soon. And the NASDAQ, it's trying to rally up and get above this yellow line here. It's above the 200 EMA. I don't know if we're going to find any support, above this. I feel like we're going to get resistance. And this is probably going to lead to another death cross in the coming days to weeks. So I'm not necessarily bullish on this. I think a lot of people are kind of just not acknowledging where we are. You kind of have to zoom out to see it. But yeah, we could be on the verge of something way more sinister in this market. We're just waiting for one news event to change the direction of sentiment.
All right. That is a good start there. Let's go into kind of like a weekly preview, what we have that we are looking at from an economic report standpoint. Nothing too interesting today. Like I said at the top, tomorrow we'll get like some consumer confidence numbers for this month. Nothing that's going to really move the market considerably. Wednesday is when shit gets real. We will get private sector employment. We'll get the JOLTS report. And then in the afternoon, we will hear from Big Daddy Jerome Powell at 2:30 Eastern. Kevin and I will go on after that to kind of break down what he says. Expectation is no rate hike this month. It's pretty much locked in. So we'll see that. That's why what he says is what's going to really move the markets. I don't expect a whole lot to happen in the 30 minutes between when they announce the rate decision and when he speaks, but I do think we'll see a little bit of movement throughout his presser. Then on Thursday, we get initial jobless claims, some productivity numbers on the two interesting there. Friday is big, non-farm payrolls, unemployment rate, and hourly wages. That is one that the Fed definitely will be looking at when it comes to their decision in December. As far as earnings reports go, Mickey D's today. Tomorrow we got Samsung, Pfizer, so we can find out about boner pills, AMD, BP, and AB InBev. How much are people drinking beer these days? And is Bud Light really just going the way of the dinosaur? Wednesday, we got Qualcomm, Airbnb, which the CEO says that like Airbnb is broken, which is a great sign for earnings on Wednesday. Toyota as well. Thursday, we get Apple, Shell, ConocoPhillips. So more oil and energy stocks, as well as Starbucks. I guess they kind of fit in the energy sector. Boom, boom, and then that's about it as far as the headline earnings calls go. Do you like that one, Kev?
I love that one. That's
energy goes right in with Shell and ConocoPhillips.
Yeah, it makes you pissed like you just drink a gallon of gasoline too.
Amen, brother. All right, so that is what we are looking at this week, and we will cover those earnings results throughout the week. Let's talk for a second. You brought up this like 10% pullback. Well, let's talk about a stock that is quite popular that has had a much, much bigger pullback, and that would be Tesla. Tesla broke below 200 a share today. As I'm speaking, it sits at 196.83. If we look at this local top back on July 19th, we are now down over 33%. That is quite the pullback. So the question now becomes, with the latest news around electric, EV demand, and yes, they're going to have the Cybertruck coming out at the end of this month. No, I will not be getting one yet. That'll probably be when I have my next house, because we're going to need an EV charging area. That's either here nor there. No one gives a shit about that. So why don't we talk about it? But when we're looking at Tesla here, at some point, it's going to be a bargain. At some point. Now, I'm not as bearish as you are. I'm not gonna shoot. My price target to buy is not in the 60s like yours, Kev. So we got some more waves. Captain Wave over here, Mr. Wavy Lays. Kevin, what are you seeing in this chart?
Down. Yeah, but beyond that, let me get into it here. Yeah, I mean, Tesla, I think, is one of the most I'm not going to say overhyped or overbought things. I think right now it's, it's a massive sell off. If you want to be a short term trader, I don't necessarily see, problems or anything wrong with getting in and out. I personally don't have that risk tolerance right now. So when I look at this, I'm just going to wait for this massive correction pattern to play out. And again, we see this big blue line here. This is something that began the top of the bull market back in November of 2021. It's, peaked, I believe, in July of 2023, which we called. And then now we're waiting for where this is going to bottom eventually, right? So this is perfectly an ABC corrective pattern. And, the impulsive moves that we're seeing today with 5% down, kind of adds to the idea that, okay, this is definitely the C wave that we're in. So we're getting close to the bottom. I'm not going to say the bottom is near, because I still think that there is a good amount of room to the bottom here. But we're going to look for where there's support, and we're holding a bit of support right here about 196 because of where we were in March of 2023. Maybe we lose that. If we do lose that, we're probably going to be coming down to somewhere around here, which would be 164. That's kind of where we were back in May of last year. And again, they had a really bad earnings call for Q1. And then we saw that they kind of dumped there. That was, again, another trade alert that we had for shorting Tesla. Went from roughly 180 down to 151. So that was a pretty decent call. But yeah, I mean, beyond that, next low that we're going to probably test would be what is this? The bottom of December. So I guess the market bottomed in October of last year, bottomed. But the local bottom is back here, and you can see that it rallied from there. So levels that we're going to keep an eye on for, support and stuff like that. See if I can find this. Got to do it sideways this way now. We'll say right here. It's not what I wanted, but like right here. And then we could also say, why are you being dumb right now? There we are. Couldn't find it, guys. All right. Right down there. So before we get to my crazy bearish target, I would say these are pretty big levels of support right here. 167. And then obviously, push this up a little bit more. I say like 103, 104. This is a game of support and resistance right now. If support doesn't hold, we just got to go to the next one. And that's kind of the way you have to treat this market, I think. Tesla's moving faster than the others, no doubt, right? We're going to see a death cross most likely on the daily pretty soon, especially since we're so far beneath the 200 EMA. So this is one that we're just going to have to keep an eye on, gauge how it's performing. And again, nothing's broken in the system yet. That's why I'm kind of bearish. I'm like confident in my bearish positioning here for Tesla, because I think that if nothing's broken yet, once we do see something broken, there's going to be a mass exit of liquidity in the system. And I could see people definitely selling off a lot of these assets. And again, Tesla's one of the top 7 that's held up this market for so long. They're seeing the cracks in the system. This is probably one of the first ones to go. I don't know if we're going to see any other ones, but if one other one gives a bad earnings call, so I don't know, Nvidia or Apple for any given reason, we could start to see this one probably accelerate in its decline. So I would be very cautious with Tesla in terms of trying to get in and hold for years right now. I'm not a financial advisor, but for me, I feel like I'd be more confident seeing if these supports hold, and if they don't, just keep going down the ladder, but not getting too greedy again past this 103 to 65 range. I think that's where it's optimal buying for me personally, and with my target being more closer to that $64, $65.
All right. That's quite the number. That'd be quite the fall from grace there.
I will say this though about Tesla, and I think this goes for everything in the market. I was talking to House over the weekend, and I said that 2020 and 2021 may be the most fraudulent time in American history for markets, because of how ridiculous everything shot up in price because of how much money was entered into the system. Right? We saw the biggest expansion of money, the monetary supply in the history of the United States in such a short period of time. Tesla before COVID was trading at $64 a share. And this is again after the stock splits and everything that they did. $64. Guys, this thing went all the way up at the bull market high to around $414. That's insane. I mean, that's very irrational. I think this is an issue with a lot of traditional finance and crypto, and all these people who kind of got used to all these gains coming in. They didn't realize that this is just kind of a glitch in the system. Like, this money will disappear at some point. So now people are still trying to, work out like, okay, everything's going to be, we're going to expect that things are going to be higher in the future because of how much money was put into the system. We also know that the Fed's also eliminating money from the system. Eventually, it's going to return to the point where we once were. I'm not saying that there's not going to be the same amount of money supply. There still is going to be the same, it's relative to where it was. It's going to be, a little bit higher still. But I think right now we are having expectations that are just exceeding reality. I think we need to go back to pre-2020 type of rationality to see where some of this stuff belongs. everything's extremely overbought, overvalued, and we need that kind of crash to reality for people to realize, hey, this isn't going to be like this forever. Even if they do quantitative easing, it's not going to be to the extent that they did for COVID. So that's just one thing I need to say, because this is I definitely is the reason why I think that $64 is still possible for Tesla, and we could still see COVID lows possible for a lot of other stocks and major indices.
Okay. I think that's a very logical and rational point. However, when it comes to talking about the markets
Not
and
logical.
crypto, there's no room for logic. So, the Moon Boys, they're not going to like that, and that's okay,
They
because
don't
we're
like
not
me.
for them. They do not like you in the least bit. Okay, what else is really getting your attention? Like I said, today's episode isn't going to be too long because I think we got a busy week ahead of us. We don't need to dilly dally or piddle dick around in any one particular area if there's not a ton of value there. So where do you want to take this, Kev, as we begin to, move toward the end of the Monday show?
Yeah, man. I definitely want to just remind people that when the markets are up like this, I think that there is opportunity, especially for where we think things are going to go. So I spent all morning pretty much just shopping for options contracts. And, I'm looking at things where there's value, right? Today, I saw that Schwab is laying off roughly around 2,000 people, which is a pretty big number, right? And again, I've had a position on Schwab for a period of time, but I saw that some of the options contracts were a little bit cheaper this morning, so I bought a few. And I just guys want you to remember that, okay, look, this is it's holding this key level of support here, right? And this is for just in general when you're looking for contracts and stuff like that. Again, not financial advice, but things you might want to keep an eye on. So today the values of a lot of these contracts are going down because the price is going up, and it's not even a considerable price movement. Oh, I'm not even sharing my screen. I'm just staring at myself talk. What an asshole I am. Here we go. Here it is.
You said it, buddy, not me.
Oh, I don't care. I'll admit it. This is where we are, right? It bounced a bit today. It's 1.8% up. It's $51 a share. A few days ago it was back below 50, and it was below this move here. But we can see how overbought it's getting on the daily really quickly, right? I think eventually, I mean, even after today, we could be in the overbought territory once again, and we could find ourselves, in the next few days breaking down below this. And again, if we break below this trend line, there's a good chance that we could come down to, we're going to lose this. We're going to have to find support somewhere in this range down here. I mean, it can be anywhere from $28, which we saw back in COVID. We can even go lower than that. It really depends. So for options right now, with the market being as stupid it is, as we look at the Dow right now, 571 points, it's not even that big of a gain, to be honest. And when you look at this and you zoom out, there's definitely tons of opportunity, I think, out there. I bought Chipotle because people didn't expect that one to go down as much as I think it will. So that's, one that I think is definitely a good bet. I do want to take a look at, let's do this right here. This kind of validates our kind of idea that we're in a bit of a market crash, and this might be a bit of a market fake out right here. This dollar should be way higher than it currently is. It actually pulled back pretty significantly today, right? You can see that there's a red candle on the daily. It's coming down. We might have to break back into this channel. We might have to find support once again on here. It's very possible, but I think that with how much strength there is in equities today, just major indices, we're seeing a lot of fake outs in this market. I mean, gold is back under 2,000 once again. We're seeing, the euro is up, which is really interesting. This is another reason why the dollar might be down. But I don't think that the dollar is done just yet. I think that we're in a bit of a fake out zone because we are awaiting that Lehman Brothers moment. And I keep saying that. That just means that something bad's going to happen. We know I could throw a dart at a dartboard, and you could pick any of the issues that are going on in the world right now, and any of those could easily just drop this market insanely bad, right? It just has to be something that spooks investors enough. We haven't got it yet. So when you see days like this where it's stupidly green, take advantage of that. I mean, just like position yourself well, not financial advice, just find opportunity in these markets because there's definitely opportunity to be had. I think we should talk about crypto though, because this is something that's really dangerous. Bitcoin right now is at 34,319, right? So it's pulled back a little bit. It's still extremely overbought on the daily. You can see that the volumes are coming down while the price is going up. That's bearish divergence. However, there is a lot that we should be accounting for. So I'm going to stop sharing my screen. I'm going to show you guys something we're seeing on Twitter, and that is how much money is moving in and out of Binance. So this is USDT, from an hour ago. Got $83 million, $83 million. That's all three different transactions. Go down here, you can see that this is a big one right here. $834 million was moved from a Binance hot wallet to a Binance cold wallet. It says unknown wallet, but it's Binance 7. It's owned by Binance. So they're definitely moving money around, right? We also know that Cynthia Loomis, who is a pro-crypto advocate, is asking for the DOJ to investigate Tether further and also bring criminal charges against Binance. So there's a little bit of speculation that there's something happening behind the scenes. I've been hearing a lot, and again, this could be rumors. Coinbase, there's a potential place where they're going to delist USDT in the United States. We saw that Kraken delisted USDT, or they're going to in November in the Canadian markets. Coinbase in Canada has already done that too. If they delist Tether in the US, that's going to be really significant for a lot of these crypto exchanges because again, there's a lot of them have those massive reserves. And I was doing the math. I talked about it. It was 10 billion. It's roughly around $10 billion that Binance has moved in terms of Tether in the past week from exchange to the hot wallets, cold wallets, and stuff like that. Guys, Binance, I believe they have like $20 billion worth of USDT on hand. So if they're moving half of that, that's really concerning, right? That's an extreme amount that they're actually moving. And if that's the case, it's like, okay, well, is all that backed by anything? And we know that Tether's got tons of FUD around it right now. So I don't necessarily feel safe in Tether. I had a Binance position. I closed it because I think that there is a lot of bad things that are going on between both Binance and Tether. If I'm going to be shorting Binance, I could be right. But if Tether goes down, guys, what's the point of having that trade open, right? You got to preserve capital, got to protect yourself. And it was just not something worth it. And I look at USDT market cap right now. For USDT market cap, we're actually at the all-time high right now. And it's really concerning to me because if we're at the all-time high right now for USDT, yet we have the lowest volumes down here. You can't even see them. Let me see if I can pull them up a little bit. Volumes have been decreasing as the market cap of USDT has been going up, right? And if we look at the amount of dominance across the entire market, it's going down. Yet they're still moving so much money around for USDT. I think that we're seeing Binance absolutely offload all their USDT holdings onto retail, trying to push the price up of these assets, liquidating the assets, and then eventually getting out through USDC. And the reason I say USDC is because look at this. USDC market cap. Inverse of what's going on with Tether. So there's money leaving the system, and this is the only way to get off in fiat and off ramp. Circle has not stopped them in any way. They haven't stopped any exchanges really. Tether continues to print money. I don't know where it's coming from. They have 76% is cash equivalent, so it's not necessarily all cash that they have to holding it. It's a good chance this thing could depeg if something bad were to come out, or if there's an investigation or DOJ charges. I think that there's definitely a chance because there's so much USDT moving around in Binance that we see another push up for Bitcoin. But again, is this, does that mean that people are going to be able to liquidate and get out of these, these assets at these prices, this 34,000, this $44,000 to $40,000 Bitcoin? I don't know. I don't know if people are going to be able to get out of these positions and if they're just going to be left with USDT, pennies on the dollar. If that's the case, think about how many trading pairs across the world, not just in the US, but across the world are, BTC, USDT, ETH, USDT. Those things, the value would be pretty much nothing if that were the case. It's kind of scary.
Yeah, that's very scary. This is eerily similar, like I said on the last show, to when you were talking to me about FTX, like literally this time last year. So it's, listen, I'm not as deep into this as you are. I don't have the CZ dartboard on my wall across from my computer, but I'm going to take your word for it and trust. Thankfully, I don't have any USDT. I have no connection to Binance in any way, shape, or form, and I feel a-okay about that. So it's definitely something that is on my radar, and I'm concerned about if you are having this much fervor and gusto about it, if you will.
Yeah, I mean, the thing is, we know that there's not going to be a BlackRock ETF or any of these ETFs unless some of the big players that have no relation to traditional finance are going to be making money off of it again, right? We're going to think about the traditional systems. Binance is not paying any taxes to the US, right? Why the fuck do they deserve to have any of their market share if there is an ETF that comes out? These guys, I know they're going after them for terrorism and stuff like that, that's fair. I think majority of the issue is just fraud. I mean, these guys are printing money out of nowhere, and now they got the trade wrong from, like I said, 2020 to 2021. People's expectations of how the market should react are extremely elevated. It's why the big banks are the ones that are screwed too, right? They bought treasuries because they had so much money on hand. Now they had to swap those at a loss. They have massive paper losses. The exchanges did the same thing. They had so much collateral out there that just dropped in value that they started getting liquidated. Now we're seeing low volumes. These guys aren't making any money whatsoever. But the problem is here, is that just because they are, in a bad place doesn't mean that the price of these assets can't go up. I think there's a good chance that we're going to see a push up here for Bitcoin. I really do believe that. And what I'm seeing is we're seeing this triangle, and we came up from the bottom of this triangle, which means we're probably going to leave through the top of it. It's just a pattern. We're seeing it go back and forth. I think we could get a fake out and come below this triangle, and then we see another push up. But I mean, I don't have a target for this, and that's kind of a scary thing because I know that with how much money there is in circulation right now, Tether out there, in FDUSD, TUSD, pick your fucking stable coin. There's a good chance that this thing can go to 40,000, you can go even above it and wick up. But are people going to be able to liquidate and get out of these positions? I don't know. That's the scary thing about it. And, maybe there are charges coming. I have no idea. I mean, I know fraud a mile away, and that's the reason why I kind of get upset about it. But that's why I had to get out of my BNB position too. Fraud is fraud, and you kind of have to be cautious about, where you have exposure to. I don't want anyone to get hurt. I don't want to get hurt financially by this. So yeah, I think that there's a good chance we're going to see Bitcoin shoot up here. It's going to be a bit of a fake out. I think the prices of these assets are going to go up. I have a long right now in BNB just because I truly believe that it's probably going to go up. Again, not financial advice, but I'm going to get out of that, and I'm just going to move that into TradFi because I just don't want to be holding any positions in BNB, Tether, or any of these stable coins right now. Crypto market is unregulated. It's the Wild West, and it's kind of a scary place to be right now. And if I'm scared about it, then I definitely think that you should have concerns about the safety of this market right now because you got
constant vigilance.
You got the worst actors in charge in an unregulated market that are just making up their own rules. I can't win that game. Just letting you guys know.
I think that is a good place to leave it. Like the great Mad Eye Moody said, constant vigilance, everybody. Don't rest on your laurels. Don't overreact. Don't get too euphoric. Even keeled. That's what we got to do. Okay. So that is where we're going to leave it for today. I appreciate everybody for joining us. We'll be back tomorrow talking the latest news impacting the market, some of the data, some earnings, all of that good stuff. So if you've not yet, hit like, subscribe to the channel, drop a comment, share us out on social media, all of that good stuff. Appreciate you all for watching. Have a great rest of your day. Stay safe out there, and we'll see you guys next time.
Take care, everyone.